All right, let me also welcome on board Mr. Anil Rai Gupta, the CMD of Havells, to discuss with us, their bumper Q3 as well as all the latest developments. Mr. Gupta, thanks for joining us. Now, top line growth, we've seen across categories actually, that growth coming in, some price hikes also during the quarter as well. How much of this would you say is value growth and how much is volume growth?
Well, in this case, quite a lot of that is volume growth, because even if some price improvements would have affected in this quarter, they were all not passed on, and some of it will get passed on in the next quarter. So I would say more than 80-85% of this would be volume growth.
Okay. And, demand for consumer durables, home appliances, we of course saw an uptick across all of that during the festive season. What's been the trend post-festive season?
Well, the demand during the festive season has been strong. So I do not say that we are seeing a tapering off. It's just that, some amount of pre-buying happened in the fourth quarter because of the increasing prices. But that also is not such a big issue because, in the in the coming fourth quarter, there will be a seasonal impact for increase in sales of fans. So I think, a little bit of, I would say pre-buying might have happened in the third quarter, but that should get evened out because of the incoming season.
Anil, under Lloyd's, there were launches in the refrigerator as well as the washing machine, segment in the last quarter. How has the performance of these launches been, and what are the revenue expectations from these segments for the financial year?
Well, Lloyd did well in the third quarter, but it has been a continued performance over the last 1 year, ever since the new manufacturing facility for air conditioners came about. You know that when we acquired the company, we were dependent on Chinese imports, but now it has been completely, transformed into own manufacturing made in India. And that has helped quite a bit in the sense of growth for the mainstay business, which is air conditioners. The new launches, the revamped range of washing machines, the new launch of refrigerators is helping the growth. But still, I would say more than 70% of the business still comes from air conditioners, which is showing decent traction. And hopefully, with the recent import on air conditioners, recent import ban on air conditioners, plus possible PLI coming into air conditioners, I think this business will continue to grow at a decent pace.
Sure. Anil, switchgears and lighting segments were going through a bit of a tough time even before COVID, as we understand. What are you expecting in terms of orders now, and how do you see this grow in the next few years?
There were certain tailwinds in the third quarter. First of all, we had a lower base last year because we had a bit of a degrowth last year because of huge slowdown in the residential sector. So I think post-lockdown, what we are seeing is things are normalizing. So there was higher demand from the residential and consumer segment for the switchgear and lighting business. But also what we could see was normalizing of the infra and the industrial business, which helped growth of industrial switchgears, helped growth of professional luminaires, which actually added to the growth in this quarter. So I would say that post-lockdown things are coming back to normal, which is definitely helping this growth.
Mr. Gupta, your November to December period is usually one where you're sourcing or procuring consumer durables. With the increase now in commodity prices, what has been the increase in your raw material costs?
Well, I think, this has been the sore point for most of the manufacturers because the raw material prices have been going up, all metals, plastics, and that is definitely going to increase the cost of the product. Some of it we were able to see it in the third quarter, some of it will come in the fourth quarter. So I guess, it depends upon product to product, but, ranging from 5% to 12%, 13%, that could be the price increases in various product categories.
Your gross margins as well have contracted by about 150 basis points. As per the commentary that you said, the commodity prices are rising and that's not still been fully reflected. So what then would be the outlook on your gross margins in light of this?
Well, the company will continue to try to push maximum cost increases finally to the market. But one should take this into consideration that there are efficiencies which have been attained because of higher growth, because of new improvements in cost structures during the lockdown period and post that as well. So I believe some sort of balancing would need to be done so that we don't pass on the entire cost increase to the consumer, but still continue to strive to maintain margins.
Okay, ad expenses, they're currently a little soft. Do you see these expenses now moving back to pre-COVID levels? Are you looking at pumping that up, or will you continue at this level, which is, I think, around 1.5% of sales?
See, right now, these are looking lower because of the sales increase. So as a percentage, it has come down. But in absolute terms, it is not much lower than compared to last year, and it is much higher than sequentially of the second quarter. So advertising promotions are coming back to normal levels with sales increasing. They may not be at the same percentage levels as earlier because of higher sales, but definitely in absolute terms, they will come back to normalized levels.
Are you also seeing a recovery in the B2B and B2G segments? What are your expectations on that front?
Well, I would say it's a strong recovery as compared to what we saw in the first 6 months. So the third quarter had a strong recovery, but also, as I said, it had tailwinds of increased buying from the trade. So stocks levels at the trade segment are higher as compared to normalized stock levels post lockdown. So it's a mix of things. Markets are better. There is increased order inflow both from the residential consumer side, but also from the industrial infra side. But there may be a short-term issue because of heavier stocks at the trade level. But I think overall things are normalizing in terms of order inputs.
What is your current market share given the shift from unorganized to organized players, and do you think that you'll be able to retain your market share going forward?
Well, difficult to give market share figures for 25 different product categories, but overall I would say yes, there has been a shift from unorganized sector to organized sector brands, because not only because of the supply chain disruption which might be coming back, but also I think the preference of consumers also changing towards more trusted and high quality brands post lockdown. So I think overall this market share shift may stay for a longer period of time.
All right, Mr. Gupta, we'll let you go on that note. Appreciate your time. Thanks very much for giving us a sense as to what the demand situation has been like, your market share as well as outlook on your gross margins. No less than a rip-roaring rally on that stock, 7% on Havells, and much due given that it has been a strong set of numbers. 14,716 and 50,043 on the Sensex. Let's take a quick break.